you engage silver up out of its spread hole, relative performance, low priced. It's enormous gains for silver versus gold. So again, we think 2025 is the year to be, watch gold, but especially watch silver and miners re-engage in performance.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 3rd through February 10th, 2025 while supplies last. This week we feature pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Michael Oliver from Momentum Structural Analysis, olivermsa.com. Michael, thank you so much for joining us today.
Good to be back, Elijah.
Well, it's great to have you, especially as we're seeing gold making new all-time highs above $2,800, almost at $2,900. Silver is also running up to over $32 an ounce. Your perspective, what we're seeing today? We're recording this on Tuesday, February 6th.
Sure. Getting a little pullback today, no big deal. The issue for us is not whether gold and silver are going up. Okay. We've been bullish on gold since February 2016, based on annual momentum, and frankly, nothing on annual momentum has altered that bullish view since then. You say, well, that's a long time. Well, look at the last bull market. Started from lows in the year 2000, 2001, and lasted until 2011, okay? And that wasn't even under the conditions we're facing, talking macroeconomic, global debt problems, et cetera. So we're bullish on gold and silver ongoing. We've never changed. All the nonsense on the way up is just arm wrestling. But we did go through a period from mid-2020 through early 2024 where silver and the miners staircased down and gold went sideways. Go up over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Okay. Persistence is what that's called. But that congestion zone, by our metrics, broke out in March of 2024. Now, in other words, we had enough long-term metrics that re-engaged after being asleep for a while. Quarterly momentum, for example. Not annual. Annual is still positive. So gold then was just above 2,000. Okay, well, this time, it was the fourth time. How do you know it wasn't going to fail? Because momentum said we're not going to fail this time. Okay, it was going to engage. Silver was 25 to 26 zone, still well below its $30 high it saw in 2020. But momentum said, no, we're coming out of here. Gold miners, GDX, for example, was 31.5 as our trigger level. Well, it traded up to 41 the other day. Okay. So but we still have this arm wrestling process, where you make a couple $100 in gold. Next thing you know, you drop back 100. I don't know, or silver goes up $3 or $4 and drops back 2 or 3. And then goes again, but it's an arduous process and it keeps shaking people out. It keeps people skeptical. It keeps the enthusiasm low. As far as I'm concerned, that's great. Keep it low. Okay. We want to compress it. Meanwhile, the enthusiasm's over there in the stock market. But if you do objective measuring, let's say you're an asset manager and you're a little bit nervous about the stock market. First off, it hadn't gained much ground since its July high. I think the S&P's up about 3% or something. But if you go back and look, and let's say you're the head of the fund, and you ask your trading guy in the back room, technician, say, give me some ideas of other places to be that might be safe, that might be lower risk, might be cheap, And he says, well, boss, gold miners, we'll show that chart in a minute, but Gold miners are cheap and starting to firm up. Gold is doing well. And how well is gold doing? Well, since the close of January 24 to the close of January 25, so a 12 full month period, gold beat the pants off the stock market. What? You wouldn't believe that if you listen to Fox Business News because, Trump got elected, or if you listen to CNBC. The stock market is the fever. Okay. Nobody seems to be noticing that gold has beat the stock market over the last year. And in fact, since the last 9 years has almost matched the stock market. When gold was back in December 2015, for example, it was $1,050. You go back and check where the S&P was then and do the percent gain, and you'll find S&P's barely beating gold. And when you measure it against the gold miners, a tiny little subsector of the stock market nobody cares about, it's beating the stock market. Yes, it's actually up more from where it was at its bare lows in 2015 than where the S&P was at that same point in time. So I think that once you punch a hole in the stock market, it doesn't have to crash. I'm not talking about that. I'm talking about just punch a hole to where the nervous guys say, hey, I need to shift some money. And so some of these asset managers, non-gold bugs even, say, okay, let's move some over there. They get good earnings. Jeez, the dividends are good, especially some of the big miners. And they've been doing well. But I think the stock market is that factor that once you punch a hole in it and drop it 10%, let's say, you're going to have a lot of that money moving. And I think that is the factor right now from the outside that will help engage gold and silver in a more vertical manner. And I think that's near at hand.
Now, you shared with me a chart that we'll put on the screen here about with respect to gold miners versus the gold price. And it's interesting because a lot of people have been talking about this, how gold miners seem to be underperforming compared to the gold price. Why do you think this is? And what does this chart show could be in the near future?
What the chart shows, it's a spread chart, month to month closes, where we divide the price of the XAU index, which is the Philadelphia Gold and Silver Miners Index of stocks. It's been around since the 1980s, therefore it has some history. And you go back to the mid-1980s on that spread, and you could see that if you divide XAU into gold price at that time, XAU was trading about 30%, 25% of the lows were about 17.5% of the price of gold, and its highs were up at 30+%. In other words, it was trading about a third of the value of an ounce of gold, okay? But then in 2008 through 2015, the spread collapsed, where the relative performance of the miners dropped. It actually started dropping before the gold market even peaked in 2011, net price peak, I'm talking. And they collapsed that spread down to the late 2015 low, where the XAU index briefly got below 5%, dividing it into gold again, of the price of gold. Very low level, obviously, when you look back and see the prior decades have been up there in the 20, 25, 35% level. So something happened. Well, they crushed the miners. Okay, fine. Means they're cheap. Okay. But if you actually measure that spread reading, which was below 4%, back in late 2015, the low monthly close, was also the low monthly close on the spread. Not just price of gold in the miners and silver, but actually of the relative performance of the miners. Since then, that spread has risen and stayed in a range that's been above that low. Now, actually, I just checked before we got together here. XAU index right now is trading at 262% gain since its low close in December 2015. Gold is trading 171% above its low close in 2017. 262%, 170. I'm talking net price now. XAU is up that much. It's up more than gold. And yet everybody thinks the miners are a dog. Well, one of the reasons is that we made a high in 2020 in that surge, which took gold so during the post-COVID event, and blew gold up to 2,000, over 2,000. And since then, price of gold has exceeded that high, price of silver exceeded that high. It was $30 back then, or actually a high monthly close about 29. But XAU and GDX, for example, are still below that price high. And so people think, well, they're underperforming. Actually, they're not. They're off that high, yes, off the best levels that they've seen, but they're still, over the last 9 years, are beating gold. Now, the issue is, and this is what we think is likely to be the best performing place to be this year, is the gold and silver miners. XAU being a representative of GDX being the trading vehicle. Okay. That spread, if you look at it carefully, there is a 3-point downtrend line going back to 1990s, I think it is. Let's see, yeah. Yeah, early, mid-1990s, there was a peak up there at 35% plus. You could draw a downtrend line. And you can see over the last year or two, since that 2020 surge where we bumped that line on the spread, we've been backing off on the spread, still above where it was in 2015, but hugging that line. Well, recent action is nudged out above that trend line. Okay, that's a wake-up call. There's also a range here you can see on the spread chart. Again, it's price versus price, so in effect, this is a price chart. You can see the upper end of that range, and GDX has a similar spread chart with a similar range, just at a different level. And we think, based on technical reasons, that you're likely now to see that spread move not just above that trend line, but take out the top of that base, in which case it's still dirt cheap relative to gold. Look back, 30, 40 years here. But it's coming up out of its base. Now, there's a red line, a horizontal on that chart that I plotted. It goes back to the mid-'80s. And you can see that every time we come down to that red line, it was support for decades. When we broke it, flush, okay? So simply from a price technical point of view, a spread chart point of view, that is resistance. That's triple the current level, okay, percent gain. If in the next year or so, a more accelerated phase in gold and silver, in part due to the breakage of the stock market bubble, more money flows into that area, especially the miners, that spread could triple from its current spread level to reach that line and bump it and even stop there. Well, that means that over the next, let's say, year or two, if the gold and silver accelerate, and I think they're about to, more upside than downside corrections, still upward but sharper, that's when the gold miners will engage. And they have the potential to triple the performance of gold during that time. So, yes, we're watching the mama market, gold. We're watching silver. But we think over the next year or two, in the acceleration phase, you will see the miners in silver re-engage against gold in a big way, where they're the better places to be within the monetary metals.
Your perspective on where the demand is coming from right now, because obviously we are seeing rising in prices, but as we look at the retail market, premiums have been completely crushed on the buy and sell side. So it seems like the retail public is selling more. But is it central banks that are buying right now? Is it the big insiders? Your perspective on who's really jumping in?
We don't make a science out of studying those data points. They're ongoing, they change over time, but we all know that the central banks, not ours, but smarter central banks have been accumulating monetary metals. For some strange reason, fine, thumbs up for them. And that's been a good supporter. But on the industrial side of silver in particular, and this I think could be the little stick of dynamite, it causes silver at some point in this process to outpace gold. They're monetary metals. That's the underlying fact. Okay. But in the case of silver, it's also an industrial metal. We know that the Chinese control or produce 80 to 90% of the solar cells in the world. And demand for that globally, especially in undeveloped or less developed continents like parts of Asia, Africa, where you don't have a local power company necessarily, a line running up under the road that runs to your house. And you've got a cell phone and you've got a few other things. You'd like the power and you'd like to have a solar panel in your backyard. Well, the Chinese have 80 to 90% of that market. And the photovoltaic cells in the Those objects have silver in them. It's an essential ingredient to the solar panels. It's not the kind of cost factor that if it went up would outprice the solar panels. It wouldn't hurt it because it's a small component, but it's an essential component, and it's massive in terms of the demand for it. So suddenly, decades ago when you were a child and when I was a younger guy, silver industrial demand was photos, taking pictures. It was in the, we sort of laugh at that now. That's gone, okay, obviously. But industrial demand, especially for the solar industry, is growing at rates that are vastly outpacing the annual production of silver. Remember, silver is not produced as a primary metal by most miners. There are silver miners, yes, but a lot of silver production comes from base metal miners who produce silver as a secondary metal. They're out to mine copper, but they find silver, so they produce it. But it's not the prime driver that motivates the miners. So even the rise in the silver price doesn't necessarily motivate the base metal miners into producing more. But anyway, if you look at an annual production of silver, you've got a flat picture for the last 5 years or so. And it's not increasing, despite the price having gone up. But demand is increasing exponentially. And this solar demand, I think, is going to continue, particularly when uncertainty hits certain parts of the world, including the U.S., where, I'd like to be confident that my house has power. If you live in Texas, you get knocked out almost every year because of hurricanes. For 2 weeks, you're out because the power's down. And pretty soon you get fed up and you want a solar panel. So even domestic solar panel demand, as I understand it, in this country, is rising sharply and ongoing. So that's a factor that it's already underway, but it's a factor that once silver gets going, they always tend to find an excuse or a reason. Oh, now I know why. But meanwhile, you're $55 and just blew out the two highs of the last 50 years before those headlines start to hit the public. And that's kind of what I expect, is that once the silver engages in its next leg, and I think we're about to, that it will be dramatic. And those two peaks at 50 that were, brief moments in time, 1975, 80, and in 2011. So it really wasn't a price level that sustained it all. It was for literally a few days. But those old highs will come out. And I think at that point, you're going to see silver do something like what we looked at on the XAU versus gold chart. Silver's equally depressed versus gold. And if you look at the spread of silver versus gold going back 50 years, you'll see that 20 of those 50 years, the price of silver divided into gold was at least 2%, sometimes 2.5% or 3%. Right now, it's 1.15%. So even if you just engage silver up out of its relative performance hole, and by the way, silver has beat gold over the last 12 months. Tell somebody that and they won't believe. Percent gain, January 2024, January 2025. You engage silver up out of its spread hole, relative performance, low priced, and you could easily go to 2%, 2.5%, and it would be routine. It's not even an extraordinary thing. 20 of the last 50 years, you've been there. Well, you do the math on that. It's enormous gains for silver versus gold. So again, we think 2025 is the year to watch gold, but especially watch silver and miners re-engage in performance.
Now, some analysts question whether silver still has a monetary element to it. You mentioned the industrial demand. Again, some people are skeptical about the monetary element in this day and age. And one argument I heard that was kind of different than I've heard before is that, with new technology and, for example, blockchain, you can maybe make gold a bit more transactional on a small denomination basis, where that silver served that purpose in the past. Your perspective on that? Do you think silver still has a monetary component and people will rush to it?
Like it behaves like money, it moves with gold. You can look, for example, at the general commodity market and say, well, silver's a commodity. Okay, well, fine. If you want to assume that. It doesn't correlate at all to the moves in the Bloomberg Commodity Index, for example. Copper does, oil does, grains do, sugar does. basic commodities, they tend to move ebbs and flows with the Bloomberg commodity. And let me give you a good example. Gold doubled and silver went up dramatically from that COVID low. From the 2015 low. Let's take that. Gold doubled by the time you got to mid 2020. Between late 2015 to mid 2020, gold doubled. 1,050, 2070. Okay. During that same time, the Bloomberg commodity silver went up with gold too. Yeah, in a zigzag, but it went with gold. Okay. Bloomberg commodity index from late 2015 made a deep low, after collapsing from highs in 2008 and 2011, secondary high, and still kept going down all the way through 2020. Not a lot, but it kept making lower lows every year between 2015 and 2020, while gold doubled. And silver went up meteorically, okay, as well, percent-wise. So silver didn't move with commodities, it moved with gold. So one can argue, well, it's not a monetary metal. Now, look at platinum, for example. There's a metal that a lot of people like to link to gold. It's totally uncorrelated. Yes, back in 2008, platinum peaked well before gold and collapsed. Gold went up through 2011, so that was a distinct difference. And then with the commodity index making a low in 2015 and continuing down to 2020, so did platinum. It didn't go up with gold. It's not a monetary metal. Silver went up during that time. So silver's behaving as if it says, hey, I'm still a monetary metal. Take its word for it. Okay? That's what I say.
Definitely. And you've talked about here and on previous shows about really the mainstream investing public moving into precious metals. Can you kind of remind us a bit more about that, and what kind of catalyst do you see for that, really the mainstream moving in?
Well, it's persistence of the monetary metals in advancing would be one thing, which people don't acknowledge. If you look at even since March of 2024, we said it's re-engaging, and silver was $25 and went to 35. Right now, it's been trading either side of 33. It's been upside with breaks on the downside. And each of those breaks turn everybody off. Oh, it's no good. It's a top. Even gold, they made a high at 2,800, and they thought that's the top. We're going back to 2,400 and correct or whatever. And those guys are left in the dirt. It now trading near 29. The point being, okay, I think when you punch a hole in the excitement bubble, the stock market, and again, when you look at it objectively, somebody's selling it. Because since last summer's high, we've barely made gains in the NASDAQ 100 and S&P, single-digit % gains. And it's been either side. It's really been more of a slight upward range of constant selling. There was buying after Trump won, November 6th. It went up big, okay, S&P, NASDAQ. Went up another week or so, then corrected, came back up, took that out. And then when he swore himself in, when he was sworn into office, it went up again. Okay, again, emotion related to Donald Trump being elected. And I can understand the Trump crowd thinks, so he's going to end inflation, et cetera, et cetera. But that's chasing news. Okay, now at that same point in time, gold sold off, by the way, dropped down to 25.40 on November 6th. Where is it now in relation to those who sold gold based on Trump winning? They're losing $300-400. Okay, so obviously it shrugged that off. But the key is to break that stock bubble, because when you do, and I don't mean momentum will break very easily. In fact, it's about 0.5% below the recent lows we made in the NASDAQ. As far as I'm concerned, that's it. I'll declare a top at that point. It's dancing on our trigger numbers. When that breaks, and it generates some price decline. I don't mean a crash, but 5 or 10% drop. That's when the emotion goes out of that bubble and sentiment gets hurt. Right now, the emotion is positive. But right now, consider yourself an average middle-class person, and you look at your horizon of the things in your life that are doing well. Okay, well, you still got your job. Okay, fine. But that you never know. Stock market goes down, you could lose it, like you did back in 2008. Okay. You look at other things, your cost of living. Higher and higher every year. The one thing that looks good is when you turn on the TV screen and you see, oh man, my retirement account's up 20% last year. Less than gold, but still up 20%, creates a smile. You take that away from the average investor, and darkness comes, emotional darkness. And then they start looking for, well, what's working? And you got a friend down the street who for last year has been in gold and silver miners and nobody else has, and he's up 25, 30%, and your stock market just dropped 20. And you're saying, damn, he was right. Okay, it causes a leakage of assets out of the broken category and it goes somewhere else. And in the past, if you go back, my son put out a report about a month ago showing, going back to early 1900s, that whenever the stock market breaks big, and usually it goes down sharply for a couple of years, and then sometimes it takes a decade to get back to where it was, what's been the best investment during that time? Gold and gold related, every single time. From 2000 to 2019, gold advanced. Yeah, there was some jiggle in 2008, but it advanced all during that time. For instance, if you go back and look at where was the NASDAQ 100 in 2000, that was the dot-com peak. It took it till 2016 to even get price back up to the price high of 2000 for the NASDAQ 100. 16 years of wasteland while gold exploded. So in each of the bear markets we've seen in stocks over the last 100 years almost, gold's been a place to be. And I strongly suggest it will be the next place to be, perceived by asset managers and investors once you punch a hole in the market.
Well, it'll definitely be interesting to continue to track this with you. Really fireworks going on in the markets right now and probably much more to come. If our viewers are interested in tracking this with you, they can go to olivermsa.com. And also you're a regular guest here on libertyandfinance.com. But if people are interested in subscribing to your newsletter, how can they find that?
That's Oliver MSA from momentumstructuralanalysis.com. Take your time on the site. We explain in pretty good depth our unorthodox way of analysis. It's not normal technical. And we've got a lot of archived reports there. You could go back and look and see what we saw at different points in time and see how we applied the method. And request some sample copies would be fine.
Fantastic. Any last thoughts before we let you go, Michael?
No, I thought, that possibly in late 2024, we'd get some of the volatility that I was expecting to see. And not due to upset in the political situation where Trump wins and knocks folks out. That's a factor, but the ongoing problem of a massive bubble of assets that when they break causes dynamics. We know that. This is the biggest bubble in history, U.S. history, stock market history. I think that volatility will show this year. In some cases, sharp downside, others sharp upside.
Fantastic. Michael, once again, thank you so much for your time and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for February 3rd through February 10th, 2025 while supplies last. This week we featured pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.